Silver future price prediction. The calm before the shock. Stop for a second. Before you scroll, before you dismiss silver as slow or boring, ask yourself one question. What if silver is silently setting up the biggest surprise move of this decade? Not loud like Bitcoin, not glamorous like tech stocks, but dangerously quiet. Because history shows us one thing very clearly. Silver never moves slowly forever. And then it explodes. Today, we're not talking hype. We're talking silver future price prediction, the forces building behind it, and why emotions, fear, and greed may soon collide in this market. By the end of this script, you won't look at silver the same way again. The emotional truth about silver. Silver is the most misunderstood asset in the financial world. Gold gets respect. Bitcoin gets attention. Stocks get excitement. Silver gets ignored. And that's exactly why it's dangerous. Every major silver rally in history started the same way. Low interest, low confidence, low expectations. Sound familiar? Right now, silver feels boring to most investors. Prices move sideways. Commentators call it dead money. But smart money knows something most people don't. Silver doesn't need excitement to move. It needs pressure. And pressure is building. Silver is not just a metal anymore. Most people still think silver is just poor man's gold. That thinking is outdated. Silver today has two personalities. One, monetary metal, protection against inflation, currency collapse, and debt crises. Industrial weapon, essential for solar panels, electric vehicles, AI hardware, medical tech, and military applications. Gold sits in vaults, silver gets consumed. And here's the emotional trigger most investors miss. Once silver is used, it's often gone forever. That means supply keeps shrinking while demand keeps rising. This is not opinion. This is math. The supply side pressure nobody talks about. Let's talk reality. Most silver is not mined for silver. It's a byproduct of mining. Copper, zinc, lead. So even if silver demand explodes, miners can't instantly produce more silver unless they mine more base metals. Now ask yourself, are copper and zinc mines expanding fast enough to meet silver demand? The answer is no. This creates a dangerous imbalance, rising demand, inflexible supply. Historically, when this gap widens too much, price doesn't adjust slowly. It snaps. End OPI. Paper silver versus physical silver, the silent conflict. Here's where emotions come in. The price you see on screen is mostly paper silver, futures, contracts, derivatives. But real-world demand is for physical silver, bars, coins, industrial use. This creates a psychological illusion. Silver looks abundant, but physically it's tight. When confidence in paper markets cracks, even slightly, investors rush to physical. And silver is a small market. Very small. A little fear can cause a massive price reaction. Silver future price prediction, realistic scenarios. Now let's talk numbers. Not fantasy, not hype, scenarios. Scenario 1, conservative path. If inflation stays sticky and industrial demand grows steadily, silver could realistically move into the $35 to $40 range over the next cycle. This alone would shock many investors who gave up on silver. Scenario 2, inflation shock or currency stress. If global debt triggers another currency crisis, silver doesn't just follow gold, it outperforms. In past cycles, silver has moved 2x to 3x faster than gold. In this case, prices in the $50 to $75 range are not extreme, they're historical behavior. Scenario 3, panic plus industrial shortage. This is the emotional wild card. If investment demand collides with industrial shortages, silver could temporarily overshoot reality. In such moments, prices don't move logically, they move emotionally. Fear buying, FOMO, supply panic. That's when triple-digit silver becomes a conversation, not a prediction, but a possibility. Why timing silver is emotionally difficult. Silver tests patience. It moves slowly until it doesn't. Before the move, because they get bored, they get frustrated, they lose belief. That emotional exhaustion is part of the cycle. Silver rewards those who wait when nothing happens, and punishes those who chase after it's already moving. Big players are watching quietly. Central banks don't talk about silver. That doesn't mean they ignore it. Industrial giants don't hype silver. They secure supply quietly. History teaches us, when powerful players stop talking and start preparing, price reacts later. Retail always finds out last. The emotional bottom line, silver is not about getting rich overnight. It's about positioning before perception changes. Right now, sentiment is low, expectations are low, belief is weak. That's not danger. That's opportunity. Because when silver moves, it doesn't ask for permission. It doesn't warn politely. It doesn't wait for consensus. It shocks. Final thought. Ask yourself this honestly. Would you rather own silver before the headlines, or chase it after everyone suddenly believes again? The future price of silver will not be decided by logic alone. It will be decided by fear, pressure, and human emotion. And those forces are already in motion. Watch closely, because silver never stays quiet forever.